What is going on? Guys, welcome back to Lit Vibes Library, the only channel where we crack open the best minds in literature and distill their wisdom into something you can actually use. If you're here to level up your financial literacy and build wealth that lasts, make sure to hit that subscribe button so you never miss an upload. Today, we are diving into a book that isn't just a recommendation. For many, it's a religion. We're talking about John C. Bogle's timeless classic, The Little Book of Common Sense Investing. Now, before we get into the nitty-gritty, let me paint you a picture. Imagine you walk into a massive field of haystack, and somewhere inside that haystack is a single, valuable needle. You can spend your entire day, your entire week, frantically digging through every piece of straw trying to find that needle. Or you could just buy the entire haystack. Sounds ridiculous, right? Well, that is the multi-trillion-dollar question at the heart of John Bogle's philosophy. He famously said, "Don't look for the needle in the haystack. Just buy the haystack." Here's the reality. Check the book hits you with on page 1. The financial services industry, the brokers, the mutual fund managers, the talking heads on TV, they need you to believe that investing is complicated. They need you to believe that you need them to pick the winning stocks. Why? Because they make a fortune in fees, whether you win or lose. Bogle, the founder of Vanguard and the inventor of the first index fund, called this out as the grand illusion. He argued that the belief that you can consistently pick the winning needle, the hot stock, or the superstar fund manager is, statistically, a loser's game. Wall Street doesn't make money when you make money. They make money when you trade, when you switch funds, when you get nervous and let them handle your panic for a fee. The entire system is designed to make you feel inadequate, so you hand over control. So, what is the common sense solution? It's embarrassingly simple. Stop trying to beat the market, and instead, become the market. Bogle's core argument is that you should invest in low-cost index funds. These are funds that simply track the entire market, like the S&P 500. By doing this, you're not betting on whether Apple will beat Microsoft next quarter. You're betting on the long-term growth of American, by extension, global business. Over the long term, the stock market has returned about 10% annually. But here is the hook. The average investor doesn't get that 10%. Why? Because of the cost matters hypothesis. It sounds boring, but it is the most powerful force in your portfolio, and most people ignore it until it's too late. Bogle dedicates a significant portion of this book to what he calls the relentless rules of humble arithmetic. He argues that the two greatest enemies of the investor are expenses and emotions. Let's talk about expenses first, because this is where the math gets brutal. If you invest in an actively managed mutual fund that charges a 1.5% fee and the market returns 7%, you're not getting 7%, you're getting 5.5%. Now, that sounds tiny. It sounds like a cup of coffee, but over a 30-year investment horizon, that 1.5% fee doesn't just take a little bit of your money. It devours. Italiano. Bogle shows how a $10,000 investment growing at 7% over 30 years turns into about $70,000. But if you pay that 1.5% fee, you end up with roughly $49,000. We aren't talking about pocket change here. We are talking about leaving a third of your potential wealth on the table just by picking the wrong fund. In investing, Bogle says, you get what you don't pay for. The less you give to the middleman, the more stays in your pocket, quietly compounding while you sleep. Then there is the second enemy. Emotions. This is where the book really digs into behavioral finance. And honestly, this is the part that stings the most because it's personal. The stock market is a roller coaster. When prices drop, fear kicks in and we want to sell. We want to cut our losses and hide our money under the mattress. When prices skyrocket, greed kicks in and we buy at the peak, right before the drop. This is timing the market. And it's a fool's errand. Bogle provides study after study showing that over 80% of active fund managers fail to beat their benchmark index over a 10 to 15-year period. Think about that. If the professionals with their Bloomberg terminals and Harvard MBAs can't do it consistently. What chance do we have when we're checking our phone under the desk at work, buying whatever stock just went viral on social media? Bogle's solution is to embrace the majesty of simplicity. You don't need to react to the daily noise. You don't need to check your balance every morning. You need to practice patience. You need to accept that the market will drop, sometimes by a lot, but that over decades, it has always trended upward. This brings us to the power of compounding, which Bogle treats almost like a sacred truth. He writes, "Time is your friend. Impulse is your enemy." The book isn't about getting rich quick. It's about getting rich, sure. It's about the discipline of buying the haystack a total stock market index fund and holding it for decades. Reinvest those dividends. Let compounding work its magic. The earlier you start, even with small amounts, the more exponential your growth becomes, because you're not just earning money on your money, you're earning money on the money your money already earned. It's the eighth wonder of the world, and Bogle positions it as the only sustainable path to retirement security. A slow, steady, boring approach beats the fast, exciting, stressful approach every single time. Now, for the skeptics thinking, "But John, what if the market crashes?" Bogle wasn't an ostrich with his head in the sand. He dedicates chapters to asset allocation. As you age, you shift your haystack from mostly stocks to more bonds. You adjust your risk based on how much time you have left. He also introduces the concept of the funny money account. And this is where he gives a little breathing room to the gamblers among us. If you absolutely love the thrill of stock picking, the casino of it all, he suggests you keep 5% of your portfolio in a separate funny money account to speculate with. Play the lottery with that. Buy the hot tech stock, trade the crypto, abe your fun. But the other 95%, that's your serious money that goes into the low-cost index fund. And you leave it alone. You protect it from yourself. You protect it from your impulses. That 95% is your future, and it deserves to be treated with respect, not adrenaline. So, what is the final verdict on the little book of common sense investing? This book is a masterclass in humility. It's a reality check that tells you that you aren't smarter than the market. And frankly, you don't need to be. You just need to be disciplined. Bogle dismantles the arrogance of Wall Street and replaces it with a blueprint for Main Street. He hands you the tools to stop playing their game and start playing yours. If you want to stop gambling with your future and start owning a piece of the future of business, this book is non-negotiable. It's short, it's punchy, and it will change how you look at your 401k. It will change how you look at your savings. It will change how you look at money itself. I hope you enjoyed this summary of John C. Bogle's masterpiece here on Lit Vibes Library. If you want to see more breakdowns of books that actually make a difference in your life, don't forget to like this video, subscribe to the channel, and ring that bell so you never miss a beat. As Bogle would say, stay the course, ignore the noise, trust the haystack. I'll see you in the next one. Peace.